Do we just need to give Twitter some time?
Well, this stock has, in the last 24 hours become a little bit of a show-me stock, if you will, and that is clearly not what this stock was priced for, prior to yesterday's results. Given the valuation, people want to see accelerating revenue growth, accelerating user growth, accelerating, engagement, and what we heard yesterday is we have to reset expectations here. So it's become a little bit of a show-me stock, and it's a little bit like Facebook when they stumbled coming out of the gate about the whole mobile revenue story. So again, this is a company, this is a stock that's have to take a reset here, and now it's up to the management to show that they can drive users and drive engagement.
Right, but if Twitter's sequential user growth is already starting to slow down, what does that say about how big Twitter can actually be?
Yeah, that's a great question, and a lot of investors today are stepping back and saying, is this more of a niche play, a niche social service, if you will? Now, 241 million users doesn't sound like a niche, but, relative to the over 1 billion users that Facebook has, investors are trying to step back and gauge how big can the Twitter universe really be, because that, answering that question really goes to what is the revenue pie out there for Twitter over the next several years? Can they, in fact, grow into this valuation? And I think a lot of people are taking a look at their models today and kind of reevaluating.
Yeah, Paul, Bloomberg Russell, we're always talking about businesses, not stocks, but I really do think the stock is the story here, that the company took so much money off the table and then investors piled in even more, that I wonder what effect a fall in the stock will have on the business, will have on the people that work at that company.
Yeah, I think, we've heard this time and time again, particularly from tech companies who tend to, trade at big valuations, and if there is a hiccup, they take a big hit to their stock. What we hear from a lot of the successful stories, and just most recently we can take Facebook, which is don't worry about the stock, put your head down, make the right decisions, do what's right for the business long term, and the stock will take care of itself. But, clearly, as I said, this was a stock that was priced to perfection yesterday, and, the quarterly results were far from perfect.
Paul, how much does the timeline view situation, how much does that bother you, this change in engagement of current users?
Yeah, that's a big issue because, when you're selling advertising, whether it's traditional advertising or certainly digital advertising, you're selling two main metrics. Number one is the size of the audience, and number two is the engagement. How long do they stay onto the particular site? That goes to how relevant an ad can be to that user. So to the extent you have issues with both your total growth of your user base and the engagement, that really presents a challenge for the folks that are trying to sell spots.
See, Paul, this is where I disagree with you, because I think that they could have a lot fewer timeline use. Timeline doesn't measure engagement. Timeline measures timelines, right? How many clicks they get. But if, for example, a user stayed on one page and saw a thread and stayed through that thread and followed every aspect of it in more depth and spent more time on that page, that would mean more engagement, fewer timelines. I wouldn't be surprised if over time, pun intended, we would see fewer timeline metrics coming out of this company.
That's right. That very well may be the case, but unfortunately for the company and unfortunately for investors, that was not the story they kind of brought to the marketplace, several months ago, and it's certainly not the story that I think most of Madison Avenue is kind of comfortable with. So right now, I think the company needs to go back and say, what really is the best environment for us to monetize our user base? Is it number of timeline views, or is it, the duration of those timeline views? So they kind of have to rethink their strategy, and I think that's what we heard from the company last night. They're thinking about new products to drive engagement, however they want to define it, and then they need to bring that message to Madison Avenue and show that this is not a niche medium, but in fact can continue to grow and be a mass medium similar to a Google or Facebook, certainly on the social side.
Now, Paul, while Twitter shares are down some 20%, Yelp shares are actually up 20 or so %. What's going on there?
Well, Yelp, had a very good quarter, and I think what's reflecting the stock today is, they very good guidance for the first quarter and for 2014 overall. So you might even have a little bit of, kind of a swap story here. People swapping out of Twitter, maybe into Yelp, maybe swapping out of Pandora as well, which also had a disappointing quarter. But I think one of the issues here for Yelp is they're one of the very few examples where an internet company has successfully, kind of cracked the local advertising code. One could argue that the real last frontier for internet advertising is local advertising. Even Google cites the struggles of targeting local advertisers and driving that business. Yelp is one of the examples where they're doing a very, very good job.